Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, it's pure euphoria and mania in NVIDIA. Can NVIDIA go higher? We're going to talk about that and what to look for. Let's dive in.
Trade Genius.
Hey everybody, Bob, Trade Genius here. Peace, love, and Trade Genius. Spring into some savings with us right now. We got some great specials running. Market is in unprecedented areas right now. We think we got a good handle on it. Go to tradelikeagenius.com. Take advantage of our spring specials. Thanks for listening. See you later.
All right, Bob, you prepared a slew of charts. Take it away.
Yeah, hey, I want to talk NVIDIA. And the only reason I care about NVIDIA at all is it's now become 33% of the movement of the S&P 500. We've gone from the Mag 7 and we're down to really the Mag 1. And the whole rationale now is that AI is going to change the future, just like the internet was going to change the future in 2000. And so you have this chart, which is really interesting to me. So this is a chart of a parabolic move. And NVIDIA is on one side, SMCI is on the other side. NVIDIA hasn't broken down yet, but SMCI has already had a pullback. I think it was close to 25% last week. And then they tried to gap it back up again and it started to fail again on Friday. So if we make a new low on SMCI from that original downtrend, SMCI is going to go down and it's going to retrace 88% of that parabola. And so if you look at NVIDIA, NVIDIA is down, it'll be going from 800 and it's potentially the moves back to $300-$400 on NVIDIA. And when that happens, you have the stock market's not going to be able to absorb those losses in the indexes. And you're going to see a cascade of selling. And I think, Phil, that's why we're seeing a lot of these big name tech guys bailing out like crazy because they absolutely know what mathematics looks like. And just to give you perspective on the absurdity of NVIDIA, I don't care how great NVIDIA is that right now, these are always fun. These aren't really, equivalencies, but you're talking here and you're looking at NVIDIA is now, the market cap of NVIDIA is larger than the production of gross domestic product of Russia. Which is absolutely insane. And that's not just NVIDIA. There's 10 other stocks, 5 other stocks bigger than NVIDIA that are in our market. And when this thing goes, it's going to be a great sucking sound. But I also want to talk about NVIDIA here too, because I have some data. This is from Jason Geppert. Again, if you could throw my chart up, Phil, I superimposed his narrative onto our chart. And so you have NVIDIA here, and it's in an uptrend. And what we have here is that it popped up above. This is a 21-day channel. It hit the top of the channel, another gap up after the earnings. But most importantly, what happened is that it created what's called a dark cloud cover candlestick pattern. These things are bearish. It means that it popped up and it didn't hold the gains at all on Friday, and it's pushed back down again. And usually that's a warning sign for the market. And Jason Geppert went back and looked back in history, and when that happens, when it makes a new high and then it has a 2% failure from open to close, you get 20% corrections in the stock. And then another person went ahead and looked at the volume, Phil, and the volume, when you get these 4-day volume surges like this at the same time, you get market corrections. The next chart shows when those have happened in the past. And you can see here, you don't make new highs until you get some sort of correction in NVIDIA. And if you really look at this, is a classic Elliott wave, right? You get a 1, 2, 3, 4, and then a finishing move here. So we'll probably have an ending move here coming at NVIDIA as well. I just want to show this to people because they need to understand that what you're seeing here is there's market forces that are basically out of balance. And I'm going to throw it back to you, Phil, because you have another chart just to show you the absurdity of these stocks versus the rest of the market.
Yeah, this was a chart I found. Top 10% of stocks by size versus the entire U.S. stock market. So when the top 10% of the stocks starts taking up in terms of market cap over 75% of the entire stock market, then we have a problem. So market cap concentration here is very, very, very high. And interestingly, we have not seen these levels in our modern era. We have to go all the way back to the Great Depression to see the market getting this concentrated. What's interesting about that is, the old saying, nothing new under the sun, right? So we've had these things happen before, even way back then in the 1920s. Human behavior is kind of the same thing. Market behavior is kind of the same thing time and time again. We're just dealing with things kind of happening at warp speed, and we're dealing with a much larger valuations because obviously the market cap on everything is, trillions of dollars versus the Great Depression. But the fact of the matter is we get these concentrations. Unfortunately, concentrations that are at these levels, what came after that was pretty atrocious in terms of the Great Depression. Now, are we facing something like that? I'm not sure that the way that things are structured, unless we have some massive breakdowns globally, and you could argue China's already kind of making headway in that, but we could be in for a long recession for sure. You could argue we're about 8 years overdue for one, because they usually come every 5 to 6 years. So, I think that's the more realistic look, is you have maybe an 18-month malaise that we have to get through, and it might give back, a ton of these gains, and you'll see a chart structure similar to what we have here, right? You have just this unbelievable rally. And, Bob's right on all of these structures. We're potentially looking at one final just crazy move higher in these things, or not. If we don't make a new high, then that we probably saw the top. So it's very simple. I think it's very important in the next week or two to see, as we come back up, do we retrace this drop that we just got, this pullback that we just got on these high flyers? Does it retrace half of that? Does it retrace 75% of that? Those are key levels. If it keeps pushing, then yeah, I think maybe we see that, and then that would play into a blow off scenario possibly into April, May. But the concentrations here are basically saying, we're on the clock. We've been saying that now. We're on the clock, and it's a weird place to be, because not only are you contending with a massive downturn in the making, but you're also contending with a massive high in the making as well. So timing's everything in this stuff, guys. You can't be too early in puts, and you can't be too late in calls. And so you really have to take it level to level here. And I think we're going to take out that concentration record high. I just think there's so much leverage and so much M2 in the system. Remember, they haven't taken all the M2 out of the system that they put into it from the COVID pump. So there's still a lot of liquidity sloshing around in the system. If you're wondering, how is it that the market can get this high? And maybe in your neck of the woods, things seem kind of depressed or already in a recession. Well, this is why. It's just not flowing into your neck of the woods. It's concentrated into the stock market. So stock market's not reality, not the economy, but sooner or later, it will catch down to the realities of what's going on under the hood. And that's where those macroeconomic indicators that we share with you guys are really important. So the charts and stuff, we pound that in the room. Join us, because we deal with this stuff every day. I see comments about, where's the chart and then the analysis. That's what we do in the room. So head on over to tradegenius.co and check out our specials over there.
Yeah, I just want to make two more points if I could, Phil. One is all of fuel's gone. So excess savings from consumers is gone, and short sale fuel is gone. It's less than 1%. Even NVDA is only 1% of float is sold short. So the only thing left is this. And it's funny. People can't find the source of this liquidity, which is really freaking scary. Normally they can put their finger on, this is the source of this leverage coming in. It's being hidden from us, which is, dark pools in the past. So, and the other thing too, I want to make a final point too, when people say, where's the sell? Phil's showing you right now, 70-80% of the market has not gone anywhere. In fact, I pulled a chart up. Small cap NASDAQ is still below the October high. Okay. So what you're really seeing here is a mirage in the market. If you had a 100 stock portfolio well balanced, you're not getting what you're seeing with NVIDIA. Okay. I guarantee you that. And so you got to be really careful. This is how they fool you into thinking everything is great, and they're out, and then they just drop the indexes and crush the stocks that you're still in. So with that, Phil, I'm out of here.
Have a great weekend, guys. We'll see you on the next episode. Take care.
Trade Genius.